Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview service here. We want to talk for an update with Oliver Turner, the Executive Vice President Corporate Development of Karora Resources. Oliver, good morning to Canada. How are you?
Good morning, Johan. Very nice to see you.
Yeah, great to see you. Thanks for taking the time. And I have to disclose that I'm a shareholder of the company also. And we see a very good long-term potential here, but you will see that after the interview also what I'm meaning. Let's get started. Oliver, you had a lot of announcements. We want to talk about the quarterly numbers, but before we get that all started, you got a new COO. I think his name is Kevin Jones. And hey, the guy comes just from next door from some big companies. How did you get him?
No, we're really happy to have him join. He's going to be starting very, very shortly. So Bevan comes from St. Ives, which is one of Goldfield's very large mines. You're right, immediately next to or just over the fence from Beta Hunt. 16 million ounces have come out of the St. Ives camp. So a very, very large gold operation. Over 900 people on the site. So Bevan's been there for about 3.5, 4 years, very well respected, has done a phenomenal job in both expanding gold production and increasing margins there by reducing some of the costs. So he knows the area well. He has a tremendous network. He's very well respected, and we think he's going to be a huge addition to Karora Resources, and obviously his impact on the Beta Hunt operation. It's been in his backyard for 3.5 years. So he's excited to get to work, and we're very happy to have him. I should note as well that Graham Sloan, of course, who was previously in that role and also had the title of MD Australia, is going to continue to be an advisor for Karora. Graham is heading off into a very well-deserved retirement. He's done a phenomenal job with Karora. It's time for him to enjoy his retirement, but we're very fortunate that Karora shareholders will have the benefit of his strategic input, hopefully for many years to come. So wonderful to have these two gentlemen there.
Okay, fantastic. So he wants to repeat the 16 million with Karora?
Yeah, of course. Absolutely.
I would love to do that.
Yeah.
Super. That would be really outstanding. Okay, fantastic. And I saw also you guys found again some coarse gold. I mean, the coarse gold for our viewers in the past, that was, let's say, the turning point a bit for the company before Karora came in. And it gave a lot of extra money, I would call it, because coarse gold you cannot calculate. I mean, you find it or you don't find it, right?
Exactly right. Yeah, very hard to find with the drill bit. We never plan on finding it, but we do know a certain area where it is more likely to occur. And the area that we found it in just last week was an area below that famous Father's Day vein discovery back in late 2018. So we found it in the muck pile from the stope. So this was coarse gold that was found in the stope. Not the same as when we are working through a development level and we get to see the ore every time we blast it. This came out in a truck. We saw it in the muck pile, identified it. We could find some more. We're very confident because we're in that zone. And obviously, as we find more, we'll make sure to keep everybody updated. But very exciting. We love to have it. It's not in our plans, but when we get it, it's an incremental bonus to what we expect to get in that stope. So great area to be, very exciting. There's going to be lots more coarse gold in this mine. But when it comes, we're not too sure, but when it comes, we're certainly happy.
Yeah, that's always super to have a nice bonus. I think the last time with the coarse gold, when you guys started, all of a sudden it turned out in 30,000 ounces, right?
Yeah, the Father's Day vein was a huge discovery. That was by far the largest one. Since then, we've had several sort of 500 to 2,000 ounce discoveries in those development rounds. We do every now and then get some in that stope ore, which, as I said, is a little bit harder to identify, but it does come in when we're in this one particular zone. We do mine the entire operation based on a geotechnical sequence, which means we manage the stress according to the pattern you should be mining it in. So we're not able to be there all the time, but when we are there, we take extra special attention to make sure we spot any coarse gold we do encounter. And we did get some last week, so we're very happy.
Fantastic. Yeah, keep it going, I would say. Great. Then let's talk about some numbers. The second quarter, you just published your numbers, 30,652 ounces gold. That was a new record production, right?
Yeah, absolutely. So since we acquired the Higginsville mill in 2019, that is a production record for the company. It came off some phenomenal mining activity by the Beta Hunt operation. We had one quarter there where we were over 100,000 tons in a single month. And just for context, back when this mine was operating at the beginning in 2019, when it was restarted, we were doing about 30,000 tons a month. So over 3 times the production level coming out of that operation, which is just reflective of phenomenal work by the miners that are underground, the efforts of the entire operation. So it is a very consistent operation. And when you move those kind of tons, you get excellent performance on ounces. So a new record from a quarterly perspective since we acquired that mill. We're very happy with it.
Super, perfect. How was the development, let's say, regarding grades, regarding recovery, stuff like this? And how was the development with the costs? I mean, everybody's talking about inflation, and I'm sure you also feel it with probably higher wages, higher explosives, higher truck diesel, etc. So what is the situation here, and how do you see it for the rest of the year?
Yeah, no, good question for sure. And Western Australia has been an area that's had enhanced inflationary impacts due to the fact that it was sealed off from the rest of the world for so long. So, as you mentioned, a very tight labor market. Hiring Bevan was just a fantastic job. People like him are in very, very high demand. So, the first quarter, we had a very high cost quarter due to those COVID impacts and the inflationary impacts, just below $1,400 an ounce. We reduced our costs from the first quarter to this second quarter by almost $200 an ounce, which is a huge achievement by the operation, again, in terms of cost control, in terms of reducing those impacts with personnel that were absent due to COVID before. We've got some of those people back. So the costs have come down, and we expect them to continue to go down in the second half of the year. If you look at our revised guidance that we put out on the gold ounce side of things, we improved our guidance towards the upper end of the range. And our cost guidance, we also increased slightly, but it tells you that we'll be reducing our costs over the second half of the year. So strong cost performance for sure. On grade, it was a high ton, lower grade quarter. So in order for us to make those ounces, we had to move more tons, which we did very, very successfully. Obviously, we've got a bit of coarse gold coming here in the third quarter, which we're excited about in terms of improving grades. Recoveries, once again, very consistent. They're always between that kind of 91.5 to 93% is typically where we sit. So strong, reliable performance, and expecting things to improve, of course, both on ounces and on costs in the third quarter and the fourth quarter of this year.
Fantastic. Okay. I saw also Beta Hunt's second decline commenced in the first quarter this year. And it looks like that you are moving extremely well, right? I mean, the second decline box cut is now completed. So what's the situation today?
Yeah. So the team there's done a tremendous job again. We've got 2 crews. One crew is attacking from surface. They finished the box cut and they're excavating down. And then also from underground, we have a second team that is working back up towards. So they will meet in the middle. Originally, Johan, we had that scheduled for completion in mid-2023. Right now, we are ahead of schedule. And in fact, we are a little bit below budget, which is very interesting to say in this environment, of course.
That helps.
Yeah, exactly, for sure. So we anticipate that decline being complete in the first quarter of 2023. What we're working on right now is the ventilation raise, and the new ventilation raise is critical for increased mining activities at Beta Hunt. So we're beginning that right now, again, a little bit ahead of schedule. So everything is going very well with that second decline.
Okay, so that would mean that you can raise, of course, massively the ore excavation, the ore extraction, of course. And that was probably also one of the reasons why you bought finally the Lakewood mill.
Exactly right. Yeah, for sure. So we'll be taking Beta Hunt from 1 million tons per annum, or approximately 1 million tons per annum. We're actually doing a bit better than that today. 1 million tons per annum up to 2 million tons per annum. And that is, we're doing some additional engineering work to see what the impact of that second mill is on that mine plan. Can we bring some of those ounces forward a little bit faster? Because remember, the last time you talked to Paul, we were working on the Higginsville expansion of the mill. And that was going to be commissioned and ready to go at the beginning of 2024. So now we have that capacity a little bit earlier. We're doing some additional engineering to see if we can bring the mine up a little bit faster. But in the meantime, we have additional capacity. So we have 1.6 million tons per annum at Higginsville, and then Lakewood, which we just purchased earlier this year, is 1 million tons per annum. So combined, we have that 2.6 million tons per annum earlier than we expected. We're evaluating a number of things that we can do with that additional capacity. We've got some very large stockpiles at Beta Hunt that we could potentially move forward into that extra capacity. So a lot of ways that we can generate additional cash and generate additional value with that additional capacity.
Fantastic. You financed that with equity, so no debt. There was also a question I saw on YouTube from a shareholder who was saying, "Hey, why didn't they take debt? It was so cheap, and now they diluted us a little bit." And I wrote him back and said, "Hey, sorry, listen, I hate that. I saw it as positive dilution."
Yeah, I mean, one of the things about the sort of fundamental differences, obviously, between debt and equity is equity doesn't have to be paid back, right? Debt, ultimately, you have that payment coming towards the end. We did have just under 30 million Canadian in debt on our balance sheet already. There's always a healthy amounts of debt that you can carry on your balance sheet, but if we were to increase that to over $100 million worth of debt on your balance sheet, right? And we're sitting around a $600 million market cap. You start to get your leverage ratios or your debt ratios a little bit too high, right? So it could have been purchased with debt. Do we want to do it? Probably not. What we did do with that bought deal financing, which was in a very small window, about 2-3 days where the market opened up. And just for your viewers, that was the largest bought deal financing done to date in the market this year. So it was very successful, entirely taken by strong long-term institutional investors. We also strengthened our shareholder base by doing that financing. And of course, it was done at levels that are higher than where we are today. So
massively higher, I would say.
Yeah, exactly. So in the end, it was very strong, brought in good shareholders. We're very, very happy we did it. But remember, we also preserved the cash that we have on the balance sheet to use for expanding Beta Hunt. And I'm sure you're going to ask me about it. We have a whole new nickel project that we're going to be working on as well. And now we have the cash in order to move that project into production as well. So it allowed us to do a lot of things.
Exactly. No, honestly, I was also very positive how you played that. I like it, especially in the light of $4.80. You did the board deal, and then your stock went down to $2.50 in the meltdown in the market. Today you are $3.20, $3.40, still way too low. That's also for sure. But before we talk about nickel, what is now the debt situation in the company? Because it looks to me like that you did with Macquarie a credit agreement, right? And I think you said before, you said $3 million, or was it $30 million? Because I was not sure if I heard that correctly. But I saw here you have a $40 million term loan and a $40 million revolving credit facility. So what is now, let's say, used of that in the light that you have, I think, over $100 million, $114 million in the bank, right?
Correct. Yeah, exactly. So we replaced the old Cortland facility, which is what we had before. Originally, it was $35 million used to acquire Higginsville. We reduced that to just below $30 million Canadian dollars. We've replaced that with a $40 million term facility from Macquarie. And for all of your investors in Australia, this is very obvious, but the stamp of approval, getting a debt facility from a bank like Macquarie is a huge deal, right? That is the largest bank in Australia. So we're thrilled to have them backing our facility. Not only that, but we reduced our interest rate from almost 10% down to just below 5%. So our cost of carrying that debt on an annual basis is also significantly reduced. Now, that's the $40 million facility. You also mentioned we have a $40 million revolving credit facility. That is there for a couple of reasons. Number one, and Paul says this all the time, we all agree, money is cheapest when you don't need it, right? So we put that facility in place when we're in a very strong financial position. We have not drawn down any of that revolving credit facility. It sits there as a backup or a standby facility for a number of reasons. Number one, it provides us additional flexibility. If we need some capital for, let's say, an interesting project or an interesting idea we have it there. And I can tell you right now, if we finance that facility today, the interest rate would be much higher than it was just a few months ago. Things change so quickly, right? And then number two as well, it provides some balance sheet strength. So if metal prices move, we have that kind of insurance policy there as well. So it does two things for us. So that really kind of shored up our balance sheet with a top tier bank, lower cost of capital, and really makes us strong moving forward.
Absolutely. So if I calculate it all together, you are net debt free.
That's right. Absolutely. Net cash. Yeah, totally. Yeah. With the
Love
cash
it.
in the balance sheet, we are a net cash company for sure.
Lovely. That's wonderful. I know why I'm a shareholder. Super. So let's come to your nickel project at the Beta Hunt mine. You released a PEA, preliminary economic assessment, and I must say I really loved the numbers because it looked to me like you calculated with $19,500 per ton nickel. The market today is approximately $24,000. If I'm completely no, sorry, it's 20, almost 23,000. And I think that is outstanding because with a pre-tax NPV at 5% with 57 million Australian dollars and IRR of 105%. So is that a project within the project?
Yeah, exactly right. So one of the reasons why the numbers are so strong is that the nickel mine, let's call it, or project, remember, Beta Hunt was a nickel operation for 40 years prior to it being a gold operation. And the relationship between the two of them is you have the nickel sits right on top of where we're mining the gold. So with the same infrastructure, and Beta Hunt has over 400 kilometers of infrastructure, you can mine gold and nickel. So what does that do for the financial numbers? It means the capital required to put this nickel project into production is very, very low. If you look at the PEA over the entire 8-year mine life, we spend only $18.7 million Australian, or in the first year, we only spend $7 million Australian. So for $7 million, you're getting close to 2,000 nickel tons per year. That's why your IRR is so high. And let me tell you one thing here, Johan, that is just the tip of the iceberg. This is a very large nickel system. We've only drilled it off over 800 meters of potentially 2.6 kilometers of strike length. So the nickel will continue to grow. We will continue to add to it. Also, we're moving from mining old areas of nickel or remnant mining into brand new areas where you can use more mechanized mining or lower cost mining. So lower cost, lower capital cost, same infrastructure right there, phenomenal NPV and IRR for the amount of money that you're putting into it. And another thing that's really interesting, and we included this in the PEA, was if you increase nickel price by 20%, the value of the project increases by 60%. So a 3 times multiple. So for any of your investors that are interested in electric vehicle metals or battery metals, this is a really, really powerful way to get exposure to that part. And it's one of the only mines in the world where you have nickel and gold right next to each other, just like this. So we're very excited about it, and we're moving full steam ahead into the next level of study. And our objective is to have that nickel in production by beginning of 2024.
Oh, that is fast. Super. Yeah. Okay. Are you still processing the nickel down the road at BHP? I think it's like a 40 kilometers drive, right?
Yeah, exactly. So BHP just restarted the Kambalda facility. So 4 kilometers just down the road. So phenomenal. Previously, we were trucking to an area called Leinster, which was close to 375 kilometers away. So again, your costs come down significantly and you're able to process it right next door. We will not be building our own processing facility. BHP takes all of our ore right off surface and pays us for the metal content.
Couldn't be better. I mean, to have a partner like BHP, I think that is also, that says something, I would say. Fantastic. Super. Yeah. Then let's talk finally about the Beta Hunt mine shortly, because you had very strong gold exploration results also. I think this is now something more, let's say, a little bit for the future also, because you want to preserve your mine life, of course. So you have to explore because you are extracting every year. So how does it look like, and where do you see, let's say, your exploration for the rest of the year?
Yeah, sure. Absolutely. So one of the zones that has done tremendously well, and I know we were talking to you when we discovered this zone, is called the Larkin zone. So we discovered the Larkin in late 2020, about September 2020. The first drill hole hit the Larkin zone. In 18 months, we took it from one drill hole through to a 300,000 ounce gold resource. Very, very fast to get it from discovery through to resource. Again, that's an example of using that existing infrastructure in place at Beta Hunt to drill off your deposit. So the Larkin has been added. We've now been expanding Fletcher, which is a new zone. Of course, Western Flanks and A Zone, which are the bread and butter of Beta Hunt. And we have two new zones as well called Mason and Cowsill, and another one called Sorensen. So the theme here at Beta Hunt is these large, continuous gold shear zones with long strike extents. They're very easy to extend, very continuous, and the mine life will be expanded for many years to come. We are every year adding more ounces than we mine to extend that mine life. And our geologists on site believe this is a multi-decade mine, so it'll be around probably much longer than you and I are involved in the story. So very exciting.
Super, perfect. Well, Oliver, then thank you very much for the update. Anything you want to add?
No, that's it. All I would say is, the share price is where the market is right now. We had a fantastic run up to $7. We're confident we'll be there again. We're confident that things like the nickel are going to continue to differentiate the company. And our job here is to deliver, add cash to the balance sheet, and talk to wonderful people like yourself to help get the story out. So thanks a lot for your time.
Thank you very much. Thanks for your time. And to be honest, we have a price target of $9.50 already for the stock because the 750 was done. Unfortunately, the market turns. So again, a great opportunity to get in. Yeah, Oliver, all the best. Thank you very much. And I think we talk quite soon.
Okay, sounds good. Thank you, Jan.
Thank you. Yeah, ladies and gentlemen, that was Oliver Turner, the Executive Vice President of Karora Resources, the fantastic, super high quality gold producer, and of course also nickel producer from Australia. And you heard it, I think things are in extremely good shape. The management is doing really the right things. They bought the Lakewood mill and they did not finance it with debt, what I really appreciate, because in situations like we have it today in the markets with a lot of high uncertainty levels, it's always good when you cannot be pressurized by a bank or you have a lot of debt against you. Please remember the company is net debt free. That is also very important to be flexible for the future. And the production is growing. The costs are really, still going lower and falling, which is fantastic. This is what we want to see despite high inflation tendencies. And also don't forget the nickel project will be the next big cash cow here in the company. And altogether you have gold, you have nickel. What else do you need? It is fantastic. Make sure you own some Karora like I do, because I think the entry price today is fantastic. It is still on a low level, and as I said, $9.50 is very likely what we see as the next target. Longer term, we see even already 12 Canadian dollars in our point and figure chart. So thanks for watching us, and bye bye from Switzerland.